Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US Market Update. Holy cow, my phone has been blowing up over the past couple of days from friends, acquaintances, old trader buddies wondering how in the world is the market rocketing to the upside with the mess of an election that we have. Well, if you watched the recording about a week ago, we went through the scenarios of historically how the market handles elections. None of what's happened should be a surprise to you. But before we get to the charts, congratulations to our 10 winners of our free quarterly subscriptions to both our Impulse and Volatility portfolios. All the winners have been notified, but if you look in the comments section under this video, you can see the listing of the names. With that said, let's take a look. A quick note, even if you weren't one of our winners, I'd still like to invite you to join us each and every Tuesday night in our Trade Finder webinars. It's a free webinar. We talk about the market, look at charts, and identify a case study consideration each and every week. Our record for picking winning case study considerations is pretty phenomenal. To register, all you have to do is go to ewotrader.com and you'll see the registration right on the front page. Look forward to seeing you in next week's webinar. Taking a look at the market, as I mentioned, none of this should be surprising. So we talked about when the market performs the best. So as a reminder, we still have this big zigzag pattern still in play, and now we know that this flat is complete. So as everybody's been asking me, how in the world is the market going to the upside? Well, on election night, we're watching the futures. As soon as it became evident that the Republicans were going to hold the Senate, at least it looks like they're going to, the futures rocketed to the upside. And that's because the market performs best when the presidency, the Senate, and the House are not all controlled by the same party. So regardless of who wins the election, and that's why the market's still moving up, even though it could be weeks before we know litigation, everything's coming, all the things that we've been talking about that could possibly happen are happening, but the market doesn't care because the market's just happy that we're going to have some sort of a gridlock in Washington and nothing too extreme can get passed. So that's why we've been moving straight to the upside. But when we take a look at that 10-day moving average, and I don't have to say it, do I? You know it, no security in any time frame gets too far away from the 10-day moving average. Mary said it anyway. You can see the market's overbought. So we need a little bit of a rest here, a little consolidation, maybe even some back and filling if we're going to take a run at making new highs, taking out that high from the beginning of September and then running up towards that target price of the C-wave extension there at 381. So it'll be interesting to see how the market trades over the next week or two. But again, a little rest is warranted. So let's take a look at the chart of the dollar. A lot of things have happened with the dollar and interest rates just since the last recording. So we take a look at the dollar. You can see we've had a couple of down days, which means that we could be getting ready to head down towards that C-wave extension, which would be interesting. But before we get there, we have to break this wave 5 low. But right now we're just at this fib 38.2% level, but two big down days. Let's take a look at interest rates, and then I'll talk about what the research has found. As a reminder, this was the pattern on 10-year rates. Remember, I showed you this symbol TNX where you can look at rates. Quite often we look at the futures chart of bonds and treasuries, but here we're looking at rates. And last recording, we had moved up. We were testing this 100% extension. Looked like we were ready to break through it, and then boom. Big move to the downside. The Federal Reserve had their meeting today. Now, what was interesting is the Federal Reserve said that in the September meeting, conditions were improving. Remember, I was talking about somebody's been selling bonds for rates to be going up like this? The Federal Reserve looks to be the culprit because in this statement today, they said they remain accommodative. So it seems like they were taking some liquidity out, but now they've turned and injected more liquidity, maybe because of the election. I did check to see whether China was selling or not. They've reduced their bond holdings by about $200 billion. That sounds like a lot, but not when you own $1.4 trillion worth of bonds. So they are diversifying a bit. China moving some of their reserves into other currencies, and Japan is now the leading holder of our debt. They used to be. China overtook them. Now Japan's back in front, but Japan's buying a lot of our debt, and so is Singapore and a few other places. So really not too much of a concern there as far as whether or not we're going to be able to get all the treasuries and bonds auctioned each and every week. There's plenty of people to buy them at this point in time. I'm going to do a recording at some point on the Federal Reserve and on monetary policy and talk about some things that you might find really interesting. But the 30-year is very similar, as you can see here, where we went up, tested that 100% level. Now we're back at the 61.8% fib extension level here on the 30-year. Taking a look at gold, gold finally broke out today of this very large descending triangle that we've had forming since back in July. But an interesting thing about these large triangles is the breakout tends to be larger and more volatile. But one day doesn't mean anything. We have to have that second day, follow through, or confirmation day, and that means tomorrow's trade in the metals will be quite interesting. Silver was a big today as well. One other thing that I wanted to share with you before we wrap this up is going back to the dollar. This potential move to the downside in the dollar, does that mean there's economic weakness ahead, significant economic weakness ahead? Is the Federal Reserve seeing that? Is that why they're being more accommodative again with the fact that bond prices are going up and rates are going back down? Those are the things that we'll be looking at over the next few weeks and months that are going to be very interesting. So thanks as always for watching, and don't forget to hit that like and subscribe button. Helps us so that others can view the same content you do if you find these valuable. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.